I'm
Welcome,
still getting,
everybody. This is our third session of Solar Connect. This session is the Financing the Future of Solar. I'm Brent Thurgood. I'm the head of people at Enerflo, and we're really glad everyone's here. So, money makes the solar world go round. Whether you're an installer, investor, or developer, understanding financing is key to success. Join us as we break down the latest in loans, TPOs, and funding models, making solar more accessible than ever. Let me introduce our panelists and our moderator today, who we're really excited to have them on, and we're lucky to have everybody. Our moderator today is my boss, Spencer Oberon he's a co-founder of Enerflo. We also have Eric White, founder and CEO of Dividend, Tim Parsons, CEO of Sunlight Financial, John Bumgardner, CRO at Mosaic, and Alex Kaplan, president of Enfin. We are down Chris. He might be joining us in a little bit, but we hope to get him. Welcome, everybody, and thanks for joining. First, I want to kick off a quick poll. Let's get some feedback from everybody here. All right, let's launch this. There's two questions that you can answer here. Those of you who are taking the poll, what is the most critical factor for securing solar project financing? And the second is, how should solar finance companies prepare for market fluctuations? Take a minute. So it's looking like for question one, most critical factor in securing project financing is installer reputation and track record. And number two is diversifying financial products. We've heard that a lot already this morning. Thank you, everybody, for sharing that. With that, Spencer, moderator, you're up.
thank you.
Yeah.
Glad to be here. I want to jump in. I was going to do something off the cuff, but maybe we'll save it for a little bit later. I have to apologize. Everybody's watching. I do some random things. So hopefully there's some entertainment value there. I just watched Eric or Alex get a little nervous. This could get crazy. And Eric's, I'm going to lean into this. This is going to be real fun. I think Tim's just along for the ride. We're going to have a good time. We had some good sessions so far. My first session was with Phil Shen and Chris from Ohm. And we were talking about the state of the industry. And just a little recap, because I think it relates really well and starts us off on this finance discussion. But the market is down about 25% in 24. They had projected that it was only going to go down 12%. And Roth and thought that 25, think mid last year, that 25 was going to be up 10, 15, 12%, whatever. And then they reassessed and thought it was going to be flat. And now Ohm is saying maybe down 5%-ish, and then Roth is saying down 10%. So there's a lot of downward pressure. There's some uncertainty with the capital markets when it comes to the new administration, what's happening with the IRA, domestic content, all of that stuff. And there's also another wave, and this is just a quick recap, another wave, I think, of installers that could be going out of business over the next 2 to 4, maybe 6 months, because they didn't raise capital and they were able to weather the storm of 23, then 24, but they weren't able to raise capital in 24. And because they didn't raise capital, they had to have a really good summer, and they put a lot of eggs in that basket. Some of those summers panned out. Some of those summers didn't. And so right now they're just like, hey, let's see what we can get going. So I think that we have another small wave of that. Then I think we think that outside of policy, crazy policy changes or crazy tariff wars that we may or may not get into with other countries, that the back half of 25 could have some real good green shoots. So that kind of sets the stage of our conversation, right? And so when it comes to solar, the finance company is really the heart of a lot of this, right? Because you guys work with in some cases, work with the sales originators, you work with the installers, and you work with the end consumer. And you even work with manufacturers and even distributors and the software companies. You're really connected to everyone. And so because of these down years that we've had in solar, I want to understand a little bit more, and I think our audience would like to understand a little bit more. How has that changed how you work with installers? And there's a couple of questions we can pull off of this, but how has that changed how you guys work with installers?
Yeah, maybe I can start and just give some high level thoughts. I think having lived through the last 2 years, there's a lot of kind of melancholy and depressive feelings across the industry. But I think it's important just to keep in mind where we started and how much progress we've made. For the really since in the 20 to 2024 timeframe, we were looking at 20% plus CAGRs. The largest solar growth period in history was during the first Trump administration. The reality is demand for energy and load growth is a real thing and is only projected to go up, especially with in light of kind of AI and the new compute requirements. And we're facing an aging grid and an inflationary environment. So prices are only going up. So as tough as the last 2 years have been, I think the reality is we were a little too well off in the preceding years. It's not sustainable to grow at those levels. So let's just not forget about where we've come from. And I think looking ahead, yeah, 2025 is going to be a tough year, but for the reasons I mentioned before, demand growth and prices and energy continuing to increase, I'm incredibly optimistic about where the industry is going looking ahead. And I think in some ways, to answer your question more directly, it's the best companies that have survived. So we're looking for who's still around because these are companies that were able to properly manage their cost structure in a very challenging environment over the last 2 years. So I think just by virtue of still being here today, companies should be able to pat themselves in the back and they clearly are doing something right.
Yeah, I like that. Let me frame this question a little bit differently because I like what you said. Because of these last 2 years, we've tightened up our rules. I've tightened up my rules at Enerflo. You guys have tightened up your like onboarding rules, who you work with, who you don't work with. I had a great conversation with John and learned some things that I actually implemented in my business from him on working with certain partners. What do? You vet them a little bit more. I'd love to understand when you guys are working with an installer today, you want to onboard someone, what are you looking for? And what's important for you guys? What are the things you guys key in on?
Maybe I'll take the lead on this, and
Go ahead.
John, you jump in. Yeah, so what we're looking for are a few key things. First, a good reputation for the partner, creating a positive experience by setting appropriate expectations, having a quality install, and getting the system to PTO in a timely manner are key for our partner's reputation. We also take a look at the financial health, to Eric's point, for partners that have been able to make it through the last few years. Being able to help customers out when issues arise and stand behind the workmanship warranty are critical. And lastly, we evaluate the experience in the industry. What I'll say for any new installers out there, our advice is to really focus on quality, be financially disciplined, and build a strong reputation from day one. It's not just about how many deals you close, it's about the quality and how you execute.
Great, Tim. Let me pull a thread on that before you go, John. When you say reputation, are you looking up like my LinkedIn likes, my Facebook followers? Like, what are you doing?
Yeah, there's a variety of sources online that you can look, from Google reviews to Better Business Bureau reviews. There's industry networks. Just understand who you're working with, because at the end of the day, it's about a partnership, and you want to be partnered with the right contractors.
Makes sense. John, you want to add to that?
Yeah, I'd love to. Thanks, Tim. I think reputation is key, and an ingredient in that is operational execution proficiency and cash management. I think what we learned in the last couple of years is just installers earning more than they spend is critical. Without financial health, we have no stability. We need installers also to provide sales rep dealer value so that we don't have the tail wagging the dog in terms of who controls the homeowner experience. We need compliance to agreements and policies, state and local. It seems simple, but in business, we need people to adhere to their agreements. And a shared homeowner value focus. If the homeowner wins, we all win. And I think we get a little too focused sometimes on profits and commissions, and it all comes down to the homeowner.
Yeah.
And then finally, a commitment to our sustainability as an industry. We need partners who want to be here for the long run.
I like that comment, John. You said a lot of really good stuff in there. One of the things I have found really cool, I don't know if everybody else has the same interactions that I have, because I get to work with you guys in a very different way than, let's say, an installer or sales org does. You guys all compete, right? You're all competitors. Yeah, you're in there to win. I think to a man on this call, I don't think there's a single one of you that wants the other person to go out of business, or like, you want everybody to be healthy, because a healthy Sunlight is good for Mosaic. A healthy Mosaic is good for Enfin and Dividend and Climate First. All of us win together. When you have an albatross in the room, like right now, we don't know what's happening with Sonova, for example. And do they climb out of the hole Phil Shen was talking about earlier? Maybe. Do they have to go in BK and restructure, or do they go away? There's a lot of, depending on what happens, there's going to be smaller or bigger waves, and that affects all of us. And so I actually like that we're all compete, but we're all in this together because of the nature of the industry that we're doing. Anybody else want to add to that before I ask a follow-up questions about installers?
No, I think just to reiterate some of the points you just made, Spencer, and John made before, is this space, we're incredibly aligned with the consumer. A happy consumer is a paying consumer. And I think that's often lost in kind of some of the negative publicity the industry has seen. And that's not to say that there's not things that we shouldn't be doing better, but we are, at least as the financing providers and for installers for that matter, we're very much aligned with the consumer. We want the consumer to actually receive value for the projects they're installing, because we do better and it makes their experience better. The other thing I would say is when we talk about how do we actually navigate a tougher environment, where we have to realize efficiencies. I think the one kind of lowest hanging area of fruit out there is customer acquisition cost. And when it comes to reducing customer acquisition cost, having a better experience for the customer, one with less cancellations, because there's not reputational risk, behooves everyone. So I just want to reinforce the fact that there really is tremendous alignment throughout this value chain. And I think, we're all rowing in the right direction.
That's cool. We're going to touch on consumers because it's been brought up several times now. And that'll be my follow-up question to this next one. But this is what I've seen. we've had a lot of people that have gone out of business, okay, over the last 2 years. A lot of them, some of them have left the industry, but there's a lot of them who haven't. They've either gone to more established companies or they're starting new companies. I don't know if I'll call it a problem, but one of the facts is that I will work with a brand new company that's been in business for 6 months or a year. And then they say, hey, Spencer, can you help me get financing? Right? Now, most of you guys have a 2-3 year requirement. You have certain balance sheet things, you're right, to mitigate your risk. What would you say to a company like myself? I'm ABC Solar. I've been in business for 9 months. What are things that I can do to get prepared to work with a reputable company like one of you guys?
Yeah,
I'll say from the
Go
perspective
ahead.
of Mosaic, our goal is to be flexible and to meet our customers where they are. So while we have standards and requirements that need to be cleared, we also will look closely at a business who's growing well and has financial health and has a sensible business plan, and we'll use other tools, right, to create the risk environment that we can tolerate for the pricing that we can offer. So I think it would be fair to say, and I'll bet everybody here has an exception process that they can make in the right instances.
Cool.
Yeah,
Alex?
I agree with that. At the end of the day, it's also our responsibility as participants in this market to interact with the folks who are active in the market and find ways of understanding who are good partners and not just using a rubric without any context. I think this is common across the board here, but I'll say at Enfin, pretty much everyone on the leadership team of our installer risk group has worked at an installer before. They understand this market and they understand the people in this market as well as the companies. And so that's a priority that we've had as we've built this program, is really to get to that next level of understanding. I would also underline, when we're looking at installers, and some of the other folks on this call have already iterated on this, reiterated it, but customer centricity is so important. Here's maybe another lens to look at this. All of us here are good at understanding consumer risk, and there's clear models in the market that investors understand that we can price to based on the credit metrics that we can pull on a pretty automated way. And like, it's a very clear process for us. Where things get messy is when you have a 750 FICO customer who rage defaults because something went wrong with their sale or their install, and they're willing to ruin their own credit because they're just so angry. And that's a curveball that as an industry, we need to avoid, because that creates that sort of uncertainty and decoupling of what is standard across a lot of consumer finance. And that's an area that we look at very carefully. And it's, other folks have mentioned it, we do care about reviews. We care about your personal reputations, and we care about getting to know the people behind the company. as long as I'm talking, I'll say a last thing for us when we look at installers is maybe a little unique because we are representing not just a financing company as Enfin, but also a major equipment manufacturer. When our customers use more of our products, we lean in with them. We figure out ways of making solutions for them. We improve their terms. And our equipment and financing business are intended to go together. And we are intentionally trying to promote an environment where our customers are using both.
Cool. Guys, this keeps coming up. So we're going to talk about the consumer. But I want to take it from, I want to start up with a little preamble on this. As over the last couple of years, we've seen a lot of AGs get involved, right? And lawsuits that suing installers, suing finance companies, suing all kinds of people are getting sued right now. And it really comes down to the consumer in their experience. And there's different ways, like how do we mitigate the finance company's risk? How do we mitigate the consumer's risk? How do we mitigate the installer's risk? It all goes back, though, if we were going to create a cornerstone of all of this risk, it all comes back to the consumer. That's the cornerstone of all of this. So I'd like to just focus a few minutes on the consumer from your guys' point of view and your lens that you guys work through. What are things that our finance companies are doing today, or you guys will be implementing here in 25 that will mitigate the risk for the consumer, hence giving them a better customer experience? And when we talk about customer experience, people say that word a lot. It's like a buzzword. Oh, customer experience. But what experience are we giving them? What assurance are we giving them as a software company that what they're being modeled is accurate? What assurance are we giving them as a finance company what they're being sold is accurate and what they're going to be paying and all of that? So I think there's some good things here we can talk about. So go ahead.
I think one of the things that's important to think about in this context is I really believe the vast majority of people who get solar on their homes are happy with it. They have a good experience. And that bears itself out in the performance of the assets that we create and the overall reputation of this industry. However, because our loss rates are so low, and we keep them low because that way we can get efficient financing and pass it on to consumers, even small pockets of problems get magnified into big issues. And the same, I think, goes for AG investigations, the whatever pops up in Time magazine and et cetera. It's the problem customers or the problems that specific segments of customers have. I think as an industry and as we at Enfin think about this, our goal is really not to lay a hammer down broadly across the board, but to find out where there are segments of customers who are having issues, whether because there's particular sales reps who are not following best practices on sales processes or particular installers who are not installing properly, and address it at that point. I think we're going to talk about Recheck on this call. I'll make a plug for it. We've been involved since day one on it. We've been very active with it operationally on our platform since beginning of Q4 of last year. I think that's a sort of industry self oversight that we need here, because small numbers of bad actors can create major adverse results for the rest of the industry and people who are doing good work and working hard to help end consumers and also take our energy future into the next level.
Good. Before we talk about Recheck, because you brought that up and we want to talk about it, let me just give everybody on the call like some anecdotal data. When we work with an installer, most of the processes and even problems that they face at the install level actually don't originate there. They don't create a lot of those problems. They originate at top of funnel with the sales org that sells the deal. So what I also find is that the consumer that's having a poor experience, yes, they can be the installer, but the majority of the time, from my experience, it originates with the sales rep. It could be malicious. Lots of times it's just lack of training. They were onboarded too quickly, whatever. And a lot of it's innocuous. So with that being said, we want to focus on solving some of these problems that originate top of funnel that are passed through from the installer to the consumer, which you guys have to clean up a lot of those messes. It's because one of those things, and we'll talk about that for a second. Can someone tell the people out there as a fifth grader, like in fifth grade terms, talk to me like I'm a fifth grader, what is recheck?
I'll give it a shot. Recheck is a sales rep ID process whereby if you have a smartphone and a driver's license and 90 seconds, you can get certified and be established as a contributor to this industry. That elevates accountability and it allows you to take both credit for the good work that you do, but also responsibility for the challenges that come downstream.
Okay, so it's like a registry of, hey, you're registered, this person is recheck certified. Does recheck do certifications, trainings, or is it just, hey, we know who you are, and then we have a history of if you're a good or a bad actor? The answer, I think Tim is saying yes.
Yeah.
Okay. How are you guys, tell me from your guys' perspective, right? A little bit more. Why recheck is something, because I know that, and there's recheck like, it doesn't have to be just recheck. We're just, it's like Kleenex, right? There's a lot of tissue brands out there, but we're just talking about Kleenex right now. So we're talking about recheck. But how does that affect your guys' business in a positive way?
Yeah, I think it really all down to creating more credibility for the sector. I think Alex was starting to allude to a self-regulating organization, or SRO, if you will. And certainly as regulated lending businesses, we have lots of different regulatory bodies overseeing us in various ways, shapes, and forms. In some cases, different regulatory bodies from one of us to the next. But when it comes to actual contractor oversight and ensuring that there's policing of the bad actors when it comes to sales practices, there really hasn't been anything out there until recheck. And this has been something that's been in the works probably since 2016. So it's taken 8 or 9 years to really get everyone on board around the process here. But this is how we police our space and maintain the credibility and reputation of our sector.
So as a consumer, if I are, and again, I don't know how much we're doing on this or other platforms. As a consumer, do I know how recheck is important to me as the end user? Do I know that, oh, this person's on recheck and this, is there a correlation being made yet? Or are we just in the infancy of just getting it on there and getting things moving? And if not, then how can we improve that?
From my observation, I don't think there's a lot of B2C validation yet on recheck stamp, on the recheck name tag on the sales rep or anything like that. The first step, I think, for all of us to prioritize has been trying to coordinate on the back end across the industry. And like Eric said, it gives us credibility. It also helps us with conversations with our partners, because we didn't have this granularity of data. And if in the financing industry, in this space, if an installer or a sales org was producing bad results, it was this binary decision. You got to choose whether or not to work with them or not as an entity. We're now able to see you've got all these really well-performing sales teams with happy customers, and here are a few spot issues that we need to talk about. And that data is being aggregated in a central place now at Recheck, so that we can have that conversation across the industry and help our partners manage their own sales teams and processes as well.
Yeah. I think, go ahead, John.
Well, Spencer, I want to speak also to the Kleenex comment that you made, because I think there is some concern there that we're seeing efforts at the state and local level to set up registries that are state specific to manage the solar industry. And I just don't think that's going to be a scalable solution.
Yeah.
And so I think we as an industry really have to get behind and back a single solution. I'm not endorsed by Recheck, but I want to see the accountability that we need. And probably most of us on this call have had this instance where you get a highly escalated bad outcome. You look that rep up in your system, and what do you know? They have logins for 9 different installers. Trying to figure out where the potential harm has been done gets really difficult. And so we need a certification process that lands people and helps us hold people accountable. I think duplicity in this solution would hurt the outcome.
Yeah, I think that's a good comment. Tim, do you have something?
Yeah, I was just going to say, and I think Alex touched on it earlier. I think it's important to remember a vast majority of customers going solar have a very positive experience. And what we're really talking about is how do you minimize the exceptions? And I think Recheck is a fantastic tool, but it is a tool to support your overall compliance management program. It's a good tool. As Eric said, it's been a long time in the making. Happy it's there, but it's just another tool as part of your broader program to minimize those exceptions. So
That's a good comment. I think of it like this. Congress has the ability to enact laws, but if you don't have, and you can make all the laws all day long that you want, right? But if you don't have anybody who enforces the law, then the law really is just only lives on paper and it's not very effective and it doesn't do anything. You guys are like Congress. You guys have gone out, you've invested time, energy, and resource to getting Recheck to be, hey, this is something we're going to adopt, right? But if it just stays there, I think that it's going to not be have the kind of effect that we want for the end consumer and for the industry. I wouldn't say this is a call to arms, but the platforms like Enerflo and SubHub and Pipe and Roar and everybody else in between, right? We all need to take this and take it to the next level on like helping the consumer know, why is this important? Are you Recheck certified? If you're not on Recheck, again, we're not there yet. But I think there's a point where it's like, hey, a lender says you can't sell if you're not Recheck, you're not verified on Recheck. Cool. Then we need to be able to enforce that for you, right? At the software level. So that when someone comes on, we're like, yeah, Bobby, sorry, you can't sell until you're Recheck certified. I can't get Recheck certified. Why is that, Bobby? I did some shady deals. All right, you need to go figure that out. And so there's a role that we have to play in enacting and enforcing and promoting that. And I think that goes all the way. So then when we do that, then the installers start doing that. And then the master sales dealers and the sales org start doing that. Because, hey, if we don't all do it, it's a lot of great feeling and feel goods that you guys have done, but it won't have the kind of lasting effect and change that we want. And it also won't allow us, John, to self-regulate in a way to say, hey, this is the source of truth. This is what works. We don't state, I love the cute little thing that you're doing. And you made all these rules without any context. Like some of the rules and like legislation that I'm seeing coming out of some of these states, I'm like, that's bonkers. Like, hey, you can cancel your solar 10 days after it's been installed. I'm like, that's insane. Yeah, it's pretty interesting. I don't know if you guys can hear that. I got something ringing on my computer. So on to anybody have any questions or comments on that specifically on Recheck? No? Okay, good. I want to talk about digital welcome calls because we can talk about a sales rep and making sure that they're good. But what are we doing also to the consumer that what they were sold is what they're getting? And I think one of the great tools that exist now, and more companies are coming out with them, is the digital welcome call. And now, are you guys all using digital welcome calls, or some of you not, haven't adopted them yet? And if you are, why are you using them?
This is Chris Climate First. I can tell you we're so small that for the last year and a half, we were doing non-digital welcome calls. So we did have people actually, calling and doing that verification process and manually or in real time. And we are looking now at shifting that to a more automated process. But that is extremely important to us. I think everybody's stated on the calls today. We want to trust our installer partners, and we want to be aligned in consumer advocacy style of finance. But then we also want to verify, make sure that the consumer was informed of everything properly, that they weren't misinformed of their ability to monetize the tax credit in all instances, that they understand every aspect of both the system side of things, but also the financial side of things. And really, we put that on ourselves. I'm sure everyone else here does, to make sure that the consumer is being fully informed of the financial responsibilities that they have with their loan through us. We're not relying on the installer to fully convey that, and we want to be there to answer any questions that they might have and clarify with them.
Okay. Any other comments anybody wants to make? That was pretty good summation.
Yeah, Mosaic's had a welcome call for a very, very long time. I think we might have been one of the pioneers on that. And it's protected our consumers over and over again when things have not had great outcomes. Surprisingly often, it also protects our installers when there's disputes and complaints between the consumers and the installers. And our installers have been very relieved that we have these calls in lots of instances because we can demonstrate that they did deliver the right information, the right terms, the right features of the loan product. And somewhere along the way, the consumer lost track of that.
Yeah.
We have piloted digital welcome calls, but we found they lack the agility to have an intervening agent if things are not going perfectly on the call. And so while it would be more sustainable and scalable to go all digital, we're working toward making sure we still have the best capture of, ethical and principled sales practices. We're going
That's
to
good.
probably stick with an agent call for some period.
That's good feedback. So it sounds like we need to create in the industry escape hatches. So if you have a good experience, because lots of times we plan for best case scenario, but it's like, hey, if a consumer is, wait a minute, what's the escape hatch then for them to talk to a human being or be redirected to the rep and
Yeah.
having that conversation?
I agree with that. So we are using digital calls on a segment of our customer base, but I think it is still very early on in the game, and people talk about automation and AI as cost saving measures, and from my perspective, that is the very bottom of the list for welcome calls for what I care about. I want to make sure that the customer is getting the information they need and that the documentation is correct. And what I like about some of these solutions is that there's a video aspect to it and an identity verification aspect to it that you can't have on a phone line call sometimes. And so I care about that a lot more than how much it costs. But I do think that the edge cases are the critical thing here. And you need to have those kind of not happy path flows worked out. But that's also where the greatest risk lies, because there are legitimate reasons why someone would not be able to do a digital call, not be able to get the information they need from it, not have the smartphone to be able to do the video that they need. And those are all fair. We need to plan around those. But there's also problematic situations why someone would not want their face on the welcome call. And if you don't figure that out right, there's no point in rolling it out at all. It's really about the blocking and tackling of getting this right. And I think that I think it can be implemented properly, but it requires a lot of thought and good planning.
I like that. Any other comments on that? We spent a lot of time on mitigating risk and taking care of the consumer. I did want to talk about batteries, right? One of the things that was interesting from the State of the Union was that California is recovering and could and hopefully should have a good year. And I think we all know the way that the California goes is the way the rest of the country goes at some point, right? So we saw California dip, go down, and have all these struggles, and then because they did an M 3.0, and then all these other states are now passing different legislation, and you combine that with everything else that's going on. But I think there's some green shoots there, but they're really heavy into batteries. Obviously, there's a TPO play with the batteries. But I would love to understand what you guys have seen for battery growth. And then also, what are you guys doing at your companies and what do you think we should be doing? You can answer either one of those questions for batteries on the finance side. Because one thing I think we should see is a battery-only loan that has a long term. And I understand some of the limitations there, but love to open this up to the floor.
Yeah, we're excited about battery in 2025 and beyond. We think there's a real opportunity to go back to the millions of homeowners that have PV solar without a battery and offer a battery. There are battery-only loans in the market. We think those products will evolve as the battery offerings will evolve. I think largely the way we think about it, the term of the loan should be limited to the warranty of the battery. So as that adjusts, I think you'll see different terms of the loan adjust as well. We also think VPP is a real game changer. And so I know it's only in certain markets now, but as VPP expands, I think that is only going to help support the growth in batteries.
I like that.
Yeah.
Anybody else?
Yeah, I'll second that. We are very bullish on battery paired systems overall. We're seeing that particularly, Spencer, as you mentioned, in California in our TPO product, we're seeing a lot of growth, and I love to see that because it was was ashamed to see what happened to the California market after NEM3 for a while people were finding their feet. And it seems like installers and consumers are figuring out a product mix that works, that includes batteries, that's priced at the right levels. We're interested in this for multiple reasons as Q Cells and our parent companies, because we also make batteries and we have a Q Home system that's battery paired. We have special pricing on our financing for that system. And so we want to show synergy there. And then we are making major investments as Q Cells in grid services capabilities, because we see that as I don't know, probably not much major revenue opportunity in the next 5 years, but 10, 15, 20 plus years, which are the investment horizons that we look at the company. We see that as a big part of the next step in the grid. And so what we're thinking a lot about now, and we've started to do this, we're going to do it more, is how do we underwrite that uncertain revenue stream of grid services over the 25 plus years that we're managing a contractual, asset for a customer with TPO, or even, that we have a loan relationship with a customer. And how do we pass some of that back into a day one value for the customer? We're at a scale where our company can underwrite that ourselves on day one. And the more that we can do that as an industry and get other investors to be comfortable with that stream of non-contractual revenue, the more that we can push that value upfront for the customer, make their value prop better, make their PPA rate or loan payment lower.
Yeah. I do know that this is an interesting question. I'm just going to throw this out here. It might be controversial and it's off script, so let's go. But my question here is there are some of you, and I won't call any names because I know who's got TPO, who doesn't, who's planning it, who's not, right? And so there's groups on this panel right here that don't have a plan for TPO. And they have a very set opinions on that. And there's also groups on here that say we do loans and we're also doing TPO. And so I'd like to understand why some of the groups are leaning into TPO when you offer loans, and why some of the groups on this call are staying with loans and not getting on the TPO bandwagon.
I've been waiting 45 minutes for controversy. Thank you, Spencer.
Yeah, I was being very agreeable. I apologize.
I think one of the lessons Mosaic learned in the last year and a half is that the really wild, disparate TPO pricing across the market has been pretty disruptive. And I think a lot of that was fueled by speculation on ITC stackers, but in large part also VPP. We've seen that create distortions to how reps show up and where the economic value of the project is going. And unfortunately, through that period, most of the economic value went to the sales reps. So what we're looking to do is bring a TPO product to market that's really homeowner value focused, that focuses on stability, end of term outcomes, and making sure that the focus is on the homeowner and moving as much unit economics to the homeowner's payment as possible. So we see batteries as a key part of that because we need the flexibility and durability of improved grid infrastructure. And we know that storage brings that.
Like it. Anybody else? Chris, I know that you're. Oh, go ahead. Go ahead, Alex.
Just from the Enphant side, we offer both. And my philosophy is the customer should have as many choices as possible under one roof. And there are customer segments that will always want to own. There are customer segments that don't have enough income to have real tax appetite. And there's just natural channels, like there's a natural product fit for certain segments of the customer base. And then everybody in the middle should be able to choose in collaboration with the sales process, what financing product they want. And by being able to operate under a single ecosystem, I think we can pass some value back into the market that way.
Cool. I like that. There's so much to discuss here and we've run out of time. But Brent, I do have the questions pulled up. I will ask them. I'm also going to pepper in some rapid fire questions to you guys as well. But first, before we do though, I do want to tie a bow on this. Chris from Climate First Bank. I know that you guys don't have a TPO. You don't have plans to have a TPO from what I've been told. Don't let me speak for you, but you guys are very, very bullish on the loan and not going to TPO, not because TPO is bad, but because you guys have a different ethos and thesis, would you want to talk about that?
Yeah, we continue to look at TPO models. We are not planning to roll anything out, but we do continue to look at those models. And I really agree with what John just shared. I think if we could find something that we felt like really delivered substantial benefit to the consumer, aside from just the monthly price at day one or year one, we'd love to find that model that works. We also want something where we can see a transfer of ownership to the homeowner at a reasonable price, at an affordable price that makes sense. We tried to mitigate that, and I think in many cases, we've been able to mitigate that with our 30-year product by stretching that term out a little bit longer and continuing to make that monthly cost affordable for somebody who's on the path to ownership at the end. But also acknowledge that is not going to work for everyone. This is not a one-size-fits-all situation, and you do have, especially the lower income wage earners who can't fully monetize the tax credit. So it's really hard to extract that full benefit for them. So again, we've been looking at different models. We would love to find the right one that's the right fit, but it does have to align with our ultimate values as a company.
Okay, I like it. All right, let's go into some rapid fire questions for the next 11 minutes. Let's hold on. First question is, how are you approaching your battery AVLs in terms of maximizing the likelihood that Lithium Plus warranties will be in place for 10 years? I'm getting a lot of hard passes on this.
Yeah, not sure if I'm answering the question the right way, but we require a minimum warranty on all batteries. And so most batteries come through with a 10-year warranty, some have 15-year, and some are even stretching it further. And so part of evaluating the manufacturer for the AVL is, do we think they're going to be around in the 10 or 15 years to support the warranty that they're offering for the battery or whatever product?
Yeah, I think that's a great point. Like, the battery is only, or the warranty is only as good as the balance sheet of the company behind it. Like, Eric White could go out and offer a warranty, but if he doesn't have the balance sheet to back it up, it's worthless. So I think it's more about underwriting the quality of the provider of the warranty than even the terms of the warranty itself.
That's a freaking great point, Eric. I can't tell you how many 25, 30-year warranties I've seen from installers that were in business for 2 years and are gone. So I'm like, oh, who's doing that warranty? Nobody.
Yep.
Anybody else who wants to take a stab at this? I think we got a good answer, but anybody else? I'll go to the next one.
No, I think just one other point I would make on that. I think it'll be important to see new entrants come to the space that actually provide some sort of backup on those warranties, because there's not that many providers of these warranties out there right now that I would expect to be around in 25 years, quite frankly.
Yeah.
So if you can have kind of an investment grade insurance company providing a warranty wrap, I think that would be important.
Eric, we'll have to talk later because I just started that company. Just kidding. Just kidding. Good. Here's the next one. How do you expect to handle VPP revenue sharing with end users?
I can take this. Everyone does it a little bit differently. Who's offering it at all right now? I believe that the best solution is a mix of upfronting some value, like I was saying earlier, underwriting that long-term revenue stream, and then also sharing some of that over time as well, so that you have a customer that is actively engaged in the value that their asset is creating. So the model that we have been rolling out, we're going to continue to roll out at more scale. It's a mixture of that, some upfront and then some revenue sharing over time, over the length of the contract.
Okay. Anybody else want to add to that?
I agree with Alex, and I do think it may be different in markets. So some markets it may be exactly like that. Other markets, it may be more revenue sharing, just depending on the VPP.
Cool. Here's the next one. This is only for Climate First. They call you out Climate First. They say, first time seeing Climate First. Any idea if you will offer your product in PA in the near future? If not, why?
In PA, I think we just added PA. If we haven't, it'll definitely be in the near future. So we were in one state last year, this time, Florida. We were in 27 states in December. We're in 39 states today. We're in all 50 in commercial. We should be in all 50 on the consumer side here no later than June.
That was easy peasy. I got some more questions for you guys. Okay. Software providers. Okay. What would you like to see us do? Right? Because most software providers, people on this call probably don't know this, or actually probably do, but a lot of software providers, we charge you money to be on our platforms, to do other things. Some charge you just like a toll booth. It's almost like protection money. And then there's other platforms that will do more things for you for that same money. And so I would love to understand from you guys quick answers. What is one or two things that a software company could do that would help you guys with any of the topics we talked about? Because so it could be mitigating risk, it could be with recheck, it could be helping qualify the customer better or communicate with the customer post install, whatever it is. What could any of the software companies out there do to help you? Where does that go?
I have a request.
Yeah.
A standard data distribution that makes the industry smarter, that helps us understand behaviors at the customer and rep level so that we can better deliver service to the people that matter to all of us, right? The borrowers, the homeowners. So how often are we getting second looked in violation of most of our agreements? How often are reps just falling out in the middle of the process? If we're seeing a lot of offering multiple products to each customer, why and in what order, and what are we trying to solve for? I think there are a lot of distortive features of our industry that are driven by loopholes in comp and adders and driving unit economics to the wrong place. So anything the software providers can do to, rather than obscure the view of the finance provider, which is sometimes the consequence, provide better visibility to us so we can be smarter.
I like it. Anybody else?
I like that. And I'll add one similar flavored comment, which is we would like to see more detail about what is being presented to the customer in the proposal. Have it ingestible in a way that we can. If you can help quality control some of that's great. Otherwise, have it ingestible in a way that we can. This goes back to all the things we're talking about. We're not trying to get parachute into the sales process at every level. It's just not feasible for us. But we need to understand if a customer is being sold something that's not possible. They're a yield on their system, or a savings assumption, or a description of the financing that's not accurate. And it really is, again, solving around those small edge cases that end up blowing up and creating bad press. And so I think that's an area where we can all have a little bit more oversight and block things that are just fundamentally wrong from being shown to the customer.
I like that. Anybody else? We got 4 minutes. I got some more. Okay, next one.
We got one more question that
yeah, I
hit.
see it. Yeah. So, what are your thoughts on Solar Insure or type of insurance companies? Because there's other ones out there besides Solar Insure. As you probably know, they are third party offering insurance back 30-year warranty on batteries such as Powerwall 3.
I think it's great for end users, homeowners, consumers to have that option. I think when it starts being included as an offering systematically, it starts moving accountability away from the accountable parties like the installer, the quality of a site audit, the quality of the equipment. And so I think it should be at consumer discretion for the most part. It's just my view.
Sweet. All right. Anybody else want to answer that? Because I got one last one.
Yeah, just one other point on that, and I'm not speaking to Solar Insure because I don't know the answer, but I think it's going to be important for the consumer to actually do their homework on these type of warranty solutions. And the questions they really need to be asking are, is this warranty coming from an investment grade counterparty, or is it being offered by a company that doesn't have a balance sheet, that's a startup that's identified an opportunity in the market and maybe very well meaning, but doesn't have the balance sheet to actually stand behind this kind of backup warranty. So it's a critical distinction that the consumers just need to be aware of.
Got it. Last question. And this is more on a personal level. Okay, so people have first careers and they have second careers. Like I hear this all the time. And so let's say that your first career is what you're doing right now and you're able to cash out and end, right? What do you guys do in your second career? What do you spend your time, energy, resource, and talent on? Ready, set, go.
A single location solar installer using everything I've learned in 15 years in this industry. That might be my retirement plan.
Rad. Cool. Tim.
I think I'm on my third career, just to note, but I think I'm focused on this and I'll figure out what's next when that time comes.
That's a very safe answer, Tim. I'm gonna get you next time. Alex, you got one?
I don't know if this is, I love what I do. I want to stay in an adjacent space. I think that non-homeowners are not being particularly served under the current environment. And just there's a lot of reasons why we don't have time to get into it now, but part of it is just really hard to make money and find investors for that. So, but I care about that. I care about what we're doing as an industry for a lot more than
In
money.
the market, right?
LMI, renters,
All
like
of it.
all of that. And that's an area that needs to get some more TLC over time. And yeah, I'd love to be able to contribute there at some point.
Love it. Chris, everybody's gonna get an answer. Brent, I'm gonna
I have
go over 30
a
seconds.
I have a second job already, but I'd like
Perfect.
to lean more into that second job as time goes on, and that is I finance cooperatives, so converting companies from owned by an owner or small group of owners into being owned by the workers, and see a lot of it in solar, by the way, which I'm a big fan
That's
of. But I
super
would love to continue to see that trend and see more workers empowered as owners of their own company.
It's like Bob Redmill. He gave all his whole company to his employees. Eric, what is it? You want to? It's
Yeah,
like
I mean,
a rock band or
I'm
something,
big on
right?
kind of local self-reliance and controlling your own destiny. Having rooftop solar being one part of that, but really just allowing the consumer to control their own destiny. Because I think at least the theme over the last couple of years is you can't rely on the government, whether it be federal or state, to be there to protect you. So what can you do to control your own destiny?
I love it. I'm gonna give you guys mine, and then we're gonna end on this. 25 to 30% of the food that you guys buy, average American, goes to waste, is rotten, is thrown away. If we could capture part of that, have a whole app planned out for it, and it's gonna be free. But we take that food, and so the food, instead of letting it go rotten, it goes to food banks. And then there's a bunch of tax write-offs and other really cool things that will be implemented at that. But then I grew up in very humble circumstances, and I was the recipient of charity and people helping me when I was a kid. And so I'd like to make sure that we're a country that's greatly blessed. We have a lot of bounty. And if we are just a little smarter in how we connect things, we could actually help out a lot of people who really need it. So that being said, guys, phenomenal session. Thank you for being here. And Brent, I turn the time over to you.
Yeah, no, Alex, John, Tim, Eric, Chris, and Spencer, thank you so much for your time and for your expertise and for joining our session. For those who are interested, for our attendees, up next, which has just started, is battery and VPP manufacturing, scaling the future of energy storage. So head to the lobby and check it out. Otherwise, thanks.
Thanks.
Take care.